All right. All right. Good morning, everybody. It just occurred to me I haven't been uploading videos to YouTube. I should probably upload a couple of these since I do the disclaimer every day. But anyways, hey, welcome to Quant Bucks Live. It is 6:32 on Wall Street, about 3 hours before the open to trading, and it's time to get our global macro on, uncover the best fundamental opportunities. Now, how do we do that? Well, we align our satellites before we even get going, and we look at things like yields and energy and metals and the stock market and currencies and crypto. And then we start drilling down. So, unlike Mondays, we review the capital stock and flow amongst institutional investors. Tomorrow, when we get information from the central bank, maybe or maybe not, our forecast update. Well, tomorrow's we at the Fed meeting, we don't get a summary of economic projections, but these ever so slowly update as the central banks ever so slowly update their forecast 18 months in advance. Like, for example, I guess I can't pull it up because I'm not in there. But look, I hear a lot of debates whether the Bank of Japan is going to raise interest rates again or not. Now that they're at zero, are they ever going to raise it higher? Well, why would you debate that? We already know. You just click on the Japanese yen there, and it shows us what the Bank of Japan has already told us. So why would you need to debate it? If someone's debating it, and if someone has an opinion, it tells me they don't know. I'm not interested in, I don't combine investing with guessing. So, anyways, so the other thing we do is we always love to uncover the intrinsic trend. So, YouTubers, if you don't know what the intrinsic trend is, that's probably why you're not as well, your results are not as you would like. So, anyways, hey, let's get going. If you are a YouTuber and you're like, man, all these pretty colors are awesome, and you would like to organize your trading and investing through, quantitative analysis of macroeconomics, yeah, well, then why don't you swing by quantbox.co? It's not very much to try it. It's very accessible. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. We can go into the QB. Oh, quick question. Let me go back. For those that are signed up for the AI alert service, are there too many alerts to your phone? No? Are you using them, honestly? Yeah, you're actually looking at them, really? I just want to make sure. Okay, I just want to make sure. Yeah. Uh yeah, because it's very expensive. So like if you're not using it, let's come up with a plan B. But if you're loving it, then I'm loving it. Okay. Yeah, not too many, and you are using them. Sweet, that makes me so happy. Bum, 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 bum. Okay, let's go here. All right, so what's going on? Yields are improving ever so slightly. Yields are improving ever so slightly. So that makes me feel good. We want these yields to come down. All right. All right. Now, oil up a bit. 82 is an interesting area. Okay. So we had a lot of down related to the peace dividend sort of thing. So we'll see if it recovers. I don't know. I don't know if you're a bull, and I don't know if you're interested in buying dips, but that's very, very interesting. Taking a look at gold. Gold did not go up yesterday, but okay, so it came down a little bit. A lot of things were sort of up and down yesterday, so that to me feels like it's up. It was up and then it was down. We're kind of right back to where we were. The eventual target, I think, is 2,500 if we're going to remain with high inflation. S&P 500, I think we're on the 50-day moving average. I think somewhere in there. So we're at that technical area where today could get very interesting. I think Amazon is reporting today. That could get interesting. Now, remember, Amazon, I don't consider it a growth company anymore. I think it's a monopoly. do you think do you think Amazon can get 300% more clients or customers in the next year? You're like, dude, everybody on earth except North Korea and Cuba has access to Amazon.com, right? But anyways, so it's more of a monopoly, and so is it going to show massive growth? I don't know. I think it's probably awesome. I think if you're going to look at Amazon, you'd look at web services and say, hey, they're the first. I remember, gee whiz, 17 years ago when they came up with the word cloud. I'm like, cloud, but it's a bookstore. What are they doing? Right. And so now it's like, well, is Google and Microsoft and others eating away from that business, Amazon Web Services? I don't see why not. It's a little convoluted to use. I don't know if you've ever used Amazon Web Services, but it's not for the average Joe. Let's put it that way. So, anyways, euro dollar, okay, okay. Again, flat. Bitcoin down, which is interesting, but those new ETFs in Hong Kong launched. Interesting. So now you're like, well, what's the big deal with that? Well, think of it if U.S. institutional investors now can invest into spot uh, ETFs related to, in this case, Bitcoin. And there was an initial drop, and then the thing rallied. I don't know how much did Bitcoin rally? 50%, 100%. A month later. Okay, interesting. So I think it dropped. Didn't it drop like 20% and then rally 100? Something silly like that, right? Well, so Bitcoin's down today, and now think of it as not just American institutions can invest into Bitcoin. Chinese institutions can invest into Bitcoin and Ethereum. Don't forget Ethereum. They have an Ethereum, spot Ethereum ETF now in Hong Kong that's listed and trading. So I don't know. Is it a big deal? Well, it's another vehicle for those that want to invest in a different jurisdiction. More the merrier if you want that sucker to go up, right? So I don't know. I don't know. I'm not a crypto expert, but it's got there's a story, a tradable story. So pay attention to Bitcoin over the next few days and see uh, how that all works out. A little bit of risk on today. Okay. Okay. Dollar weak, yen weak, Swissy weak. Okay. Or it should be in that scenario. Anything going on here? Yeah. You notice these are changing, huh? Okay. And these are changing. There's stuff going on. And that's what's in the AI alerts, by the way. Or fundamental alerts that get sent to your phone or your email, depending on the type of alert. But it's telling you that these things are changing. I was going to log in. Do I have? Yeah, so I got one at midnight. Thank you. 12:02 a.m. I got an alert on my phone, and strong bearish Kiwi dollar went from a -8 to a -10. See, and it's all blurry because it's obscene. Obscene profits. Yeah, no. But yeah, it said Quantbox.co is not advice for investment. New alert. Strong bearish Kiwi dollar went from a -8 to a -10. Then it said breakdown. There were changes in retail sentiment. It went from 0 to -1. And there was a change in the trend reading from a 2 to a 1. So it's less bullish technically. And retail sentiment went from neutral to negative. Oh, wait, that wasn't the recent one. That was yesterday at 8 o'clock at night. Sorry, I have to scroll. The one at midnight, oh, was very similar. Kiwi dollar. So it was freaking out basically. Kiwi dollar, Kiwi dollar, Kiwi dollar. Cool. fundamental changes, right? So, anyways, cool. At least you pull it up, you look at it, and now you see over here it's very bearish. So I got an alert at 8 o'clock last night and another one at midnight as Asia opened and then London was opening. Things were changing. Okay, cool. And I was alerted to pay attention to Kiwi dollar. Nice. Let's take a look at the risk gauges and see if they're lining up here. Wow, this is the first time in what, months it seems, that we have three gauges, right? There's always been one that's mixed. Okay, interesting. Interesting. All right, talk to me, Goose. What do we got? Long-term risk off, some risk on, both weekly and daily. Then in my mind, I know because I spend some time in front of my charts, and we're at resistance in some areas. So the biggest news for me is whether this -4 is going to go to a +2, or are these going to go negative? Meaning we hit resistance over the last few days. We've had to come up, up, up to resistance, and so now is it going to be down for 2 weeks? Sell in May and go away, right? So what if that happens? We tiptoe into May and it turns bearish. Well, we want to see that happen. All right. So we could be there. We could be there, right? So I'm on high alert. So what's going on? Let's say a weekly. Okay, yen is still weak. Okay. That we had the vol, it's not measuring vol there, it's measuring just the price relative to before. So yen is still weak, and that's risk on. And VIX volatility has come down. Okay. Well, nothing happened yesterday. Maybe that's why volatility is down. So anyway, so that's good. But you see how I mean, look, yields are flat, gold is flat, Dixie, right? The US dollar is flat, S&P 500 up a little bit. This is over the week. So you can see how, like, just a couple of tweaks to this and it can go either way, right? So I'm going to treat I guess I'm looking at risk um this weekly bias and paying most attention to, will it roll over negative? I think it'll take a lot to make this stuff go risk on, right? To get monthly to go, to go a little more risk on, or at least more neutral. And this wouldn't take much. So, in particular, if some of these assets were already at resistance, things could change. So I got to pay attention to that. All right. So, anyways, still long term risk off, short term risk on. All right. Again, short term rally, long term downward trend could be interesting. All right, let's take a look at the scatter plot. Where do we want to start? Silver way down. Interesting. Copper down. Interesting. Okay, those are disinflationary. Gold down. So all the metals are down. That's risk off, or dovish, meaning inflation coming down. Okay, I wonder if those are buy dip scenarios. Bitcoin's down. That would be generally risk off. Let's look at the stock indices. And DAX down a little bit. NASDAQ neutral with a neutral score. The score now in the Japanese stock market is just a paltry 1, but it's way up today. Remember, weak yen pushes the Japanese stock market up. What did I say about intervention? It never works. Okay, so you buy it low, and and try to hang on with that kind of volatility. It's buy it low, jam your stop, and hold on for dear life. Okay. Well, anyways, you can see it's economically neutral, but the biggest winner today. S&P 500 still has a lot of bid built into it. Okay. Neutral scores for both NASDAQ and Dow. Okay. Russell up today, but that could be a big loser. Okay. Remember, if interest rates stay high, they're the ones that have to borrow money from banks and pay the high interest rate. Okay, so they're going to be impacted more than bigger companies that don't have to go to the bank. They issue bonds or they can get cheaper credit lines or they just have more credit. I mean, that's what it is. Small businesses more sensitive to interest rates. All right, cool. So they're up, but so I don't know. It seems to be a mixed bag based on logic. How are we doing here? So yeah, oil flat. I'm interested in maybe buying dips on that. Gold is down. I might be interested in buying in that with the theory again of that we have persistent inflation. Now, didn't Europe report inflation today? Like their economy is improving, but inflation is slightly coming back. I have to do a deeper dive into that later today. But anyway, so if inflation is persistent and coming back in Europe like it's already come back in the United States, that's hawkish on gold, right? So anyways, interesting. Silver, the biggest loser today. Um, I did look at it to buy. Glad I didn't. It's a 6. I mean, it's a pretty good, score, right? Okay. It's a pretty good score. Look how low it is. Wow, it got creamed yesterday. Okay. Came down twice as much as gold. Well, maybe I want to buy it, huh? I love buying red candles. So anyways, what else? Do you want to look at the majors? Sure. Oh, those are the minors. Yeah, a lot of crosses here. Boo, 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 boo. Okay, euro yen up, pound yen up, Aussie yen down a little bit, huh? That's interesting. Some of these Swissies are like, notice like Kiwi Swissy down, Kiwi CAD down. Okay, Kiwi yen, even Kiwi yen down. It's hard to believe. Kiwi's weak, and like for example, again, how to read this this scatter plot. Kiwi Swiss franc is scored -8 on quant box. -8. And it's down. See, as expected, bearish and expected. Down, bearish and this is risk off. This stuff's risk off. Okay. Now, I like to trade minors like this, not the yen pairs. I'd like to maybe even move that over to majors, but I like to trade cross pairs when we don't have an underlying intrinsic trend. Maybe today is good where we have two. We have short term long and long term short. So maybe you get into like Wayne, I love trading pound Kiwi. All right, well, you do you. This would be a acceptable situation. Um, I don't trade pound Kiwi very often, right? Um, Zip over to the majors, and these are dollar pairs. Okay, great. Pound dollar down, risk off. Aussie dollar pound, Aussie dollar risk off. Euro dollar up, but just ever so slightly. So that's risk on. But again, they had acceptably good non-recessionary data today. I think I have to go back. But this is risk off, and 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 this is risk off. This is risk on. So either news, like I said, has come out and shown some signs of, pro euro volatility, or this is an outlier and is going to be down here by the end of the day. So you would look at that and say, well, that's going the wrong way relative to all the other dollar pairs. So think this through. If this is going to fall down here somewhere later today, then wouldn't it be interesting if euro dollar was at some form of resistance? Like, wouldn't it be interesting if it was here, getting ready to fall? Well, that's how you do that. Okay. You'd look at that and say, well, I mean, it depends if you grew up with Sesame Street or not, right? If you grew up with Sesame Street, um, right, in particular in the 70s when like they would smoke cigarettes while doing doing the show, right? Mr. Hooper, it's Looper. Yeah, three of these things belong together. Three of these things are one and the same. But one of these things don't belong here. Now it's time to play our game. It's time to play our game. And you got to look at like three things out of the four are related. So you see a little kid playing it with a basketball, a little kid playing with a soccer ball, a little kid playing with a football, and the fourth one has an AR-15. And you're like, three of these things belong together, but one of these things should be a red flag, right? So, yeah, so I look at this and I'm like, euro dollar seems to be out of position. This is not it's not doing what all the other dollar pairs are. So now I would tiptoe over to my euro dollar chart and look for scenarios technically in which euro dollar might fall. And I might be into that. That might be my thing today. Okay. And of course, if it's making higher highs and higher lows because good euro news is pushing that up today, well, that explains why it's doing something different from everything else. It's not a dollar issue. Like this is dollar issue, dollar issue, dollar issue, dollar issue, dollar issue. We call that correlation. It's all moving together. It probably has something to do with the dollar. But if euro had awesome news today, then sweet, that explains it. So you'd sit on your chart doing technical analysis, watching it making higher highs and higher lows. Well, that has nothing to do with you if you're a bear. You just look at it and you stare at it and you're like, huh, I guess it ain't coming down. Yeah, well, because they got some good news and that's why it's an outlier. But if it turned bearish, uh-huh, oh, wee, right? And you're you, suddenly you're excited. So, anyways, that's how you use the scatter plot. This one might be out of position. It's got a negative score and it's up. Well, that doesn't seem right. So we have to figure out why. It's either an opportunity or something has changed. Okay. But much better than randomly trading currencies. Okay. Better than randomly trading currencies. Nothing's on the calendar today, but, and that's a big but, Amazon. Amazon's reporting, and that could be a market mover. Okay. In particular, I don't know. Like, will it be a big market mover? Well, thinking it through, like based on what I said earlier, if it's a monopoly, I don't think it will move the market that much. I'm talking about the entire stock market. But if it's losing market share in Amazon Web Services, then Amazon stock could go down, not necessarily in the entire S&P 500, right? And Microsoft and Google would probably make money because people are going to say, ah, ha, ha, they're gaining market share. Cool, but will it take down the whole, NASDAQ, S&P 500? Will it take down the Dow? Will the Nikkei fall? Will Hong Kong collapse? No, probably not. Huh? Cool. Wednesday, anything going on? ADP, PMI, ISM, jolts, and our hawkish pause, where Jay Powell will come out and say, yeah, we're not getting the data that we were hoping to see. And 3 might be wrong, which is interesting because that's well before our next summary of economic projections. So they can't move the dot plot. They can't really explain why, right? But the opinions have probably changed quite a bit at the Fed, but we won't be able to quantify it yet. It'll just be Jay Powell will say, wait, okay. I don't know if he'll say maybe not 3. I don't know if he right, maybe 2, right? So anyways, tomorrow will be interesting, but I think it'll be open to a lot of interpretation, which is dangerous. I want to just kind of realign the satellites here on a Tuesday morning. Okay. Make sure we see the bigger picture. I'm sure you spend a lot of time on a 15-minute chart. So every once in a while, I think we should step back. Okay. And, anyways, the Japanese stock market is still up 3.6% for the week. This is over the last 7 days. So, right? Right? And then what else is the next biggest winner? Small business, the business stock market. Okay. Oh, interesting. That's usually most interest rate sensitive. Aussie yen's still up. NASDAQ's still up, but up from the previous bottom. That's just over the last 7 days. Remember, so it's up 3%, but it was down 6. So it still smells like a -3 to me. Okay. But it's up. There's no doubt. Cool. I like to sell green candles. You get it? I have to combine this like a heat or like the scatter plot. I have to combine this and say, like, for example, on Dow, if my memory serves me correctly, we're at resistance. So I could look at Dow and say, based on here, okay, it's up, but not 3% like some of these, right? Russell up 3.5, NASDAQ up 3, Dow only up 1%. And if I'm at resistance, what if they all roll over? I take a shot on the Dow. It's up. Good. It's wrong. I'm right. And then I confirm that thesis with technical analysis. I don't sell it because we're at a certain price. I sell it because it hit that certain price, which we call resistance, and then turn technically bearish. Okay. All right. So, but see, NASDAQ is up quite a bit because some of the companies, not all of them, but some of the companies make a ton of money. But Apple reports later in the week. I forget when that is. And I kind of think Apple is vulnerable. They've lost an entire market. Their phones are not good compared to competition, in my humble opinion, in particular in Asia, where you see like people in Asia don't want an iPhone. They're not as good as, you know, Chinese phones. So, okay, so we got a problem there. Okay. And they're being sued all over the world and all that kind of stuff and whatever. And so the stock is not a huge performer this year. I believe it is down this year, but it still trades 25 times earnings. That's expensive, even if it's down 20%. It's still expensive. And so if Tim Cook comes out and says, well, we kind of lost China, we're losing the battle there, And apparently, going from 12 cameras to 13 cameras is not going to sell more phones. And we're losing our monopoly in our iTunes store, or whatever you call it, because now Europe and the United States are yelling at them. So we're going to lose some money there. And by the way, 25 times earnings, but our revenue growth is only grown at 4% or something like that. It's really hard to justify 25 times earnings. So there's some vulnerability there, is all I'm saying. And okay. Mm, okay. And it would be classic monopoly. So, that company was making more money than God. And so they're like, well, let's just throw money everywhere and play around with these ideas. We want to have a self driving car just like Google, right? And they start spending money like crazy. Um, and then they don't realize nobody uses iPads anymore. Why not? That's a great product, right? And their phones are not competitive. So, anyways, there's some vulnerability there later in the week. Okay. Yeah. Yeah. Anyways, that brutal, huh? That brutal analysis, but you have to make sure you don't own Apple stock because you love Apple. There's better reasons to own the Apple stock. Anyways, Euro yen, CAD yen, they're still up. You notice some of these, but notice the patterns. Like there's some pound, right? Pound dollar, pound Swissy, pound CAD. All right. So pound is relatively strong. We already identified that technically at Forex today, how it came roaring back not long ago. Pound Kiwi. Well, Kiwi is the weak one here. Aussie Swissy. So a lot of these are like modestly bullish, right? Okay. USD Rand, Bitcoin, the worst performing asset. Yeah. Cool. Now, like, let's take a look at this. Do you want to buy Bitcoin because it's down 6%? No. What if you had a thesis? You flipped a coin. That's your thesis. And you say, so here's what you say. Heads, Bitcoin's going to 100,000. Tails, Bitcoin's going to zero. And you flip a coin. Ding. I'm a bull. Sweet. It's going to $100,000. Do you know? No, you don't know. Okay, great. But you have a bias. Now use technical analysis. Now, hopefully, QuantBox gets you better than flipping a coin. But if you don't understand what QuantBox is doing, at least look at it. But you make a decision, and now your charts are easily read. It's either making a series of higher highs and higher lows, or it's not. You place trades and you hold and you let them run. Okay. And so you look at your chart in a different fashion when you've made a decision. You have to just trust me on this if you've never done it. If you're looking at your chart simply to tell you the time and the price and not the decision, the decision's already been made. You're a bull. Great. So is now the right time and price? That's what a chart will tell you. And if you know the fundamentals are going your way, like your opinion is like this isn't going to go from 63,000 to 64,000, but instead you buy it at 63,000 and it goes to 100. You're in it for a much longer period of time. And with the stop loss, you can remove risk. Okay. You might be able to compound and build positions. Okay. Same thing like I just we just discussed how silver's down right now, 1% for the week. Sweet. I might be into that. I might want to buy some of that. Okay. Why? Because it's down. But I would think in my mind, I say, well, if inflation remains persistent, and I can define inflation like how about wage growth? How about rent? Are they going to go away anytime soon? I don't know. I can have an opinion on that. And if they're going to stick around and we're going to keep inflation around 3 instead of around 2, then I could be opportunistic with things like, oh, silver's down over the last 7 days. Ooh, I should take a look at that chart. See if there's on the higher time frame, like a daily chart, or where's the moving average? Where's the support? Where's the pivots? What about gold? Okay, where are the moving averages on the daily? Where's the monthly pivot points? Okay. Where are the role reversals? Okay. And then platinum's already up. Whoa, dude. Whoa, platinum's already gone. Cool. So I have to decide, is that too high and that's going to be a sell this week? Or are these too low and are they going to be a buy this week? Well, that's our job. Yeah, those are the right questions. I don't know the answers, of course. That's why the next step is go look at those and do your technical analysis of price time data. Okay, cool. Okay, so euro, I think is doing well today. Again, look at it technically, euro versus everything else. Look at a euro index. And Kiwi is very, very, very weak. Kiwi is very, very, very weak. Kiwi is very, very, very weak. Huh. So these are opportunities. Okay. So today, look at Aussie versus Kiwi. There might be a buy a dip scenario. We don't know, but it would make logical sense quantitatively. You can open up your pound Kiwi chart and look for technical analysis that confirms a buy a dip scenario. We don't know if it'll happen technically, but it makes sense quantitatively. Same thing with euro. Okay, and then we come down here. Excuse me. Okay, Kiwi dollar. Okay, Quantbox has been blowing up my phone. Dude, check out Kiwi dollar. Seriously. Okay, Kiwi Swiss franc, Kiwi CAD. Okay, but these are a little more neutral. So you're like, okay, maybe not these. Maybe not these. Although that might be an opportunity. So you might put this on your hit list today where you're like, you'll look at Kiwi CAD, but you're neutral. But look, if you get a trade, you'll take it because your plan is it'll go from neutral to bearish with a down day today. Maybe. Okay. Although you'll see the fundamentals, right, are different than some of these others. So you go through and you're like, okay, today maybe I'll sell Kiwi dollar. Maybe today I'll sell Kiwi Swiss franc. Maybe today I'll sell Kiwi CAD. Okay. And then you go back up. Maybe today you'll buy Euro Kiwi. Maybe today you'll buy Pound Kiwi. Maybe today you'll buy Aussie Kiwi. It would make logical sense. Will those trades produce today or tomorrow or next week? We don't know. That wouldn't be macro analysis. So that's why you have a chart. Ooh, I missed my trade again. Um, okay, so you would set things up and say, well, wouldn't it be cool if I had opportunities for Kiwi, right? And you start pulling some of these up. Okay. I don't trade a lot of crosses, but you could do those, right? So if you don't know how to do that, for example, I can pull up Aussie. Is this going to work? Okay. And let's make these Kiwis. Okay. So Aussie Kiwi, Euro Kiwi, Kiwi CAD, Kiwi Swiss franc. I'm just randomly grabbing these. I'm probably missing a Kiwi dollar, Kiwi yen. Yeah, I guess so. We'll do Kiwi dollar over here. Wanted more of the Kiwi crosses. Did I miss any over here? Kiwi, Kiwi. I think we did Aussie Kiwi. Yep. Euro Kiwi, Euro CAD, Euro Kiwi, Kiwi CAD. Yeah, yeah, yeah. You wouldn't pound Kiwi. Okay, that's good. Let's do a pound Kiwi. All right. All right. So I just added all that, but this is labeled scan Aussie, but now it's all Kiwis. So now you go to File, Profile, Save As. Okay. And instead of scan Aussie, we want to call it scan NZD. And now we have a new profile. Okay, right there. Cool. So now we could look at that and say, all right, today I'm interested in maybe selling Kiwi. So let's put them all in the same time frame. That might be helpful. So put them all on 4 hours just so we can quickly take a look at the bigger time frame. Yep, 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 yep. No. Okay. And we want to do things like, all right, well, if we're selling Kiwi, okay, we have to find where support is, and that that qualifies as a giant maybe for the up. All right, cool. Okay, 4 hour. We're interested in maybe buying this. We need to find support. Got to change the if we're with this template. Got to change the bias pivots to be bullish. Okay, cool. 4 hour. Okay. This one's a little trickier because it's already moved so much. Okay. Okay. And remember, you knew this yesterday, Euro Kiwi up. So nothing's changed a lot except we've already had today's day trade. For example, if you're in the day trading group at Investor Boot Camp, as a bull, there to there is the day. That's what's projected. So the new projection is a pullback, and I guess like there, that far back, and this area will rise later today. That one's going to be a harder one to trade, but it might be the better trade. So I'm going to have to, this one's going to be trickier. Maybe I want to play the hourly 21. Maybe I want to play this as a roll reversal. Yeah, I might have to be on a smaller time frame and be a little more aggressive, which is more work. Okay. So Kiwi CAD would be a sell on the 4 hour. 21 is above the 55, but it's a kiss. Hasn't made a lower low, has made a higher high. It's not quite ready. Pound dollar, or sorry, for a daily, sorry. But, 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 but a little too early. I think I would trap this a little bit and come back. It's not quite. That's not. It's soon. So on a daily, remember we want to sell Kiwi. On a daily, it's acceptable to sell between this 21 and this 55. Okay? And it's acceptable to plan this. But we've hit this bottom and it gives us a risk. But fundamentally, it makes sense for this trend to continue. All right. It's just CAD's not very strong. So it may not be the best thing to be selling, but you could still sort of pay attention and say, well, over the next couple of days, if it starts moving this way, you have little chances for little day trades. And and try to let them run and test the fences. And if it breaks through, now you got it running. But technically that's mediocre. But fundamentally it's okay. Okay, so we want to sell Kiwi and buy Swiss franc, but Swiss franc's weak because of the policy of the Swiss National Bank. Also, the potential for that we've had recently for risk on. When there's risk on, Swiss franc weakens. So if you were selling this, the rest of the world would be in risk off mode. And so you'd have to be planning for that. And I'm okay I'm okay if you're going to be a bear in that zone and target this. But once again, the technical analysis is a bit, you'd be a bit early, I think. You'd have to be very, very sort of aggressive. I can't even zoom in more on this 4 hour chart. Um, like the most aggressive, we'll call that resistance. How about that? Okay. So I'm going to have that. And again, how you define this support is going to be how aggressive you are. You could call the support higher and call it already a lower low. Like you might say, Wayne, the way I read this is it's made a lower low, so I'm going to sell a lower high. Yeah, yeah. You could do that. But if your aggression level is lower, you would say that's still too early. That's middle of the range. I don't really want to do it yet. So you would identify, instead of connecting the wick bottoms, you'd take the old wick tops. Okay, you're playing old resistance, not new support, and you're like, well, I'll do the same. Okay, I'll do the same thing as you, but I'm going to take this lower low and sell that lower high. And you can take that, even though it's lower ground, the higher ground, because you're doing this quantitatively. If you get this right technically, the odds of this running for hundreds of pips is greater than you just doing technical analysis alone, because you don't know why it's moving. You just know that it's made a lower low and a lower high. So I could wait, give up one trading day, and still be short for 2 months. Wouldn't cost me much, but it would lower my risk. So again, judgment call. Okay. You can look at Kiwi dollar, 4 hour. Okay. I could play it a little different if I was already risk off on the general market, like the US dollar. And if the stock market comes down today, the US dollar gets strong. I'm like, okay, that might happen. It hasn't happened yet, but that could be something. So I put this in bearish mode. Okay. Because that's my bias. I wake up and I want to sell Kiwi. Good. Well, buy some dollar with it? Maybe. So if the US stock market falls today, I could play this more bearishly. Now, I chose not to do it on the other pair, but I can choose to do it on this pair. Why? Well, my bias for the dollar is different. And I say, well, I might play the wicks on this one. And I could look at this potentially this way, and therefore I could set it up like a head and shoulders, you see? And if the stock market's coming down, the US dollar is going to get strong, and so I could try this one. The other one I'd probably pass on, but if this worked, the other one would work tomorrow. So, I'll put it in the parking lot and revisit that tomorrow. And so I'm like, this is a maybe. Could I kick it off the 4 hour 5? Yeah. This zone, yeah. Um, it's not the greatest price in the world, but it's sort of this thing that might be setting up. So again, I got work to do, but for those reasons, that might be more attractive than the other one, which has a similar setup. Doesn't mean I do the same thing. Now, for this pound, we want up. We're already halfway to our target for the week. So this is a boring everyday swing. Well, every week swing. Nothing terribly complicated by this. If you were already a bull, and of course I think QuantBox had you as a bull. We can go check that, by the way. Um, then we're already up here. So how would I play this if I was interested in buying dips? Well, I'd pay attention to this price. Okay. The other thing I could do is say, all right, I already have a technical plan based a swing plan. This bottom predicts this top, not the higher one, the conservative one. All right, that's strategy. Okay. Again, if you think of it this way, QuantBox is fundamentally giving you a strategy of up. Now you go to your chart and you say, well, I'm going to deploy a swing trading strategy, which is up for the week. So you're buying dips on smaller time frames now, but buying and holding and add and compounding, right? And then you can then say, all right, well, we're well on our way. That's great. And you change your bias pivot, not from bullish to bearish because you're a bull, okay, but change it from weekly to daily because now you're day trading into your swing. And then you go back to what I just did, and I said, well, this would be an interesting buy the dip scenario. Well, that's what's probably going down. Okay. Why? Well, we went from the buy zone, which we knew this was a weekly buy zone. We've hit a target. So now there's profit taking. And I love red candles as a bull. So bring it on down, everybody. And then the plan later today or tomorrow is long and strong. Again. Okay. And if I don't get something like that, let me reemphasize what I said before we even opened the charts. If I've flipped a coin or used QuantBox to make a fundamental decision and I'm a bull on pound Kiwi, I either buy a dip or I don't buy a dip. There's not a situation in the world in which I sell. So I either get a strong technical setup or I don't buy that pair. It keeps me out of trouble. Okay. When you go shopping hungry, you'll buy anything. But in Forex, right? You make a decision because if you don't stand for something, you'll fall for anything. Oh my God, look at the red candle on the I guess I'll buy the Kiwi. What are you, knucklehead? You're buying the Kiwi, the most pathetic major currency on the planet. Well, I saw a 5-8 cross. Like, oh my God, on a 5-minute chart. I mean, seriously, okay? Stand for something. Are you really you're a bull on a Kiwi? No, I don't know what's going on. Well, we're going to end that nonsense here and now. Okay? And then we didn't flip that to a Kiwi. So anyways, we'll leave that. So, okay? At what point do you flip from a bull to a bear? Using QuantBox, macroeconomic data and comparative analysis between two economies. That's when I flip, Rick. Okay. Now, QuantBox sends me an email or a text and keeps me updated. Okay. But when do I flip from a bull to a bear? Well, let's answer that quantitatively. When you look at institutional positioning, retail positioning, seasonality, which is the 20-year average of what typically happens this time of year, the technical analysis of trend, GDP, inflation, jobs, interest rates, and then taking all of that data for Europe and all of that data from New Zealand. And then we compare the two and create a score, Rick. So when suddenly New Zealand is kicking ass and beating up Europe, well, I might want to buy Kiwi. But right now, it's not even close. It's not even close. So why would I want to own an asset that's collapsing relative to Europe? Okay. Hey, New Zealand is kicking butt over North Korea and Cuba. I'd rather own New Zealand dollar than Cuban pesos. But relative to Europe, nope. Relative to Australia, nope. Relative to England, nope. Okay. So that's when I flip. But see, that's very institutional, right, Rick? It's very institutional. It's like, that's big picture. Like, oh my God, well, you know, that means you'll never sell Kiwi for the next 2 or 3 or 4 months. Yeah, probably. Okay. But then I can sit down with the client and explain why I'm not. Or a client could say, "Well, dude, you got a lot of New Zealand dollar trades." I'm like, "Yeah, it's the weakest major currency on the planet. It's being decimated by the policies in China. And so it's weak, and I'm taking advantage of that across the board. Only when I confirm it with technical analysis." Well, that sounds pretty smart. Rick says, so the scores tend not to be volatile. No, I know you're new with QuantBox. I know. No, they're not volatile. They're like, for example, um, let's do inflation. How often do we update inflation data? Monthly. Yeah. How often do we update jobs? How often does interest rates change? Right? Yeah. So the thing is, you have the strategy before you even look at the chart. And you see all the green on the screen? So if you worked for me in my hedge fund and you were on the trading desk and you sold Euro Kiwi and lost money, I couldn't figure out why you did it. Now, if you did it and made money, maybe I'll be a little more lenient. I'm like, dude, why did you do that? And I'm like, Rick, why did you sell that? And you're like, well, it was at a monthly R3 and it rolled over on a 5 minute. I was opportunistic. So I kind of scalped into a day trade and I picked up some pips. I'm like, dude, we're not that hungry. That's a little too aggressive for me. Like, just, I'd rather you have spent the last 3 months building positions, right? Than picking up pips in front of a freight train, runaway freight train. But if you did it and lost money, I'd have to hang you high for the rest of the team to see. So no one would ever do something so stupid, right? Well, and we get some good out of it. And Rick, you're new, but one day I'll tell you about the suit of shame. And you would have to wear the suit of shame. Yeah. What was I going to bring up on Quantbox? I was just what was I going to? Oh no, I lost my train of thought. Um, what was I going to do? Yields, forecast, fundamentals, swing. Um, wait, let me look at. Oh yeah, I remember. Okay, good. Sorry, this video went long today, but I got some sleep, so sorry. Um, I was so tired yesterday. Um, we could look at some of these. Okay. There's a built-in back tester for you. And you're like, okay, Euro Kiwi. These are right. These are things that I would never trade until I got QuantBox. I just never did these assets. I never traded cross pairs. I focused on dollar and yen 99% of the time. Okay. So I went back 30 days And by and large, Quant Box has been bullish on Kiwi dollar. Now, we could probably we can go back even further and say, well, what about like going back to January 1st? Let's see if we can go that far back. Okay. Back in January, very bullish, and then we took it all back. And then since the beginning of March, Rick, every single day since the beginning of March, you could have been opening your charts going, should I buy it today? Should I buy it now? Is it at support? Is it making higher lows? Look at this. These are daily candles. Higher high, higher low, higher high, higher low, higher high, higher low, right? Then a big pause. Notice Quantbox was already pulling back because things were fundamentally changing. And then price stabilized and fizzled out. And then Quantbox went boom from a -2 to a +4 to a +5. And then price took off again. It's amazing, isn't it? I don't like trading the pound recently because it goes from super strong to super weak, super strong to super weak. But we can pull up this one and not as good. You can see, and this is what I felt, but now we know quantitatively. It Quantbox lost sort of favor toward this pair going back just about the same time. So you wouldn't have even looked at this one. NZD. You can pull up another one. So we did euro. CAD. No, probably yens. Okay, well, why not? That'll be exciting. Oh, disastrous. Okay, don't look at that one. Aussie Kiwi. Okay, much more recently, huh? Look at this. Stay away, stay away, stay away, or sell, 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 sell if you want. But then notice here, price changed, something changed, probably in the economic news. And then suddenly Quantbox saw the upward price movement, which scores it negative now on the technical analysis. Remember, it's doing trend reading. Trend turned up, score collapsed on us, went neutral, 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 neutral to about April 5th, and then more on the bullish side, buy the dip, buy the dip, buy the dip. So you can see we can go back in time and read Quantbox. Isn't this amazing? This tool here to go back and it's showing you the scores that was, and this is the actual daily price time data. It shows you Quantbox is only looking at this trend and only scoring it a little bit, but it's looking at all the other data too, things like institutional positioning. So if institutions had stops here and suddenly we had a big pop over several days, it these scores collapse because of these changes. The technical analysis collapsed, the positioning collapsed. Maybe it's a seasonal issue and we expected it, but then it happened and seasonality flips, and all of a sudden, it's quite good. We went from an 8 to a 4 to a 1 in 3 days. So is it overly sensitive? No. But is it stupidly, stubbornly callous? No. This is a really nice tool. But if we go back to this Euro Kiwi, okay, if you were selling this, there was no real reason to justify it. And that would be the problem. What you would be doing is illogical. And so what I'm trying to do is teach you to be an institutional investor so that whatever you do, Rick, it makes sense. Now, it may not produce an opportunity. We're talking about fundamental logic for the flow of capital around the world. This is a billion times bigger than Forex as, a trading asset. No, this is money flowing around the world. So if we can analyze it quantitatively and do comparative analysis between New Zealand and Europe, and it makes sense for capital to be flowing from one to the other, then we can go to our chart and set up opportunities that are congruent with that analysis, but now using solid technical trade setups, right? So you can look at this and say, Kiwi cat is down today. Sweet. I might buy it. Okay. But still, you're going to have sound logical technical analysis. But at least you're not randomly trading up and down and up and down, around and around. Okay. You set up a fundamental base on actually quantitatively analyzing the economic data and then go set up those trades. Now, what's the major benefit that you get, more winning trades? No. But if your trades are set up with fundamentals and the fundamentals remain the same, obviously they're changing, but they remain relatively the same, meaning if you go to something and you're a bull fundamentally and you get technical trades that are bullish technically, then when you align your technical analysis with your fundamental analysis, I'm not telling you you're going to have 10 times more winning trades. No, but you could let the trade run longer. Your average winner, and this makes sense. Remember, there's congruency. The market is going there for a reason. And technically, you bought a dip and you got the direction correctly. So now you're trading with the flow of capital around the world, Rick. Your average winner might go from, let's say it this way, instead of you trying to pick up 25 pips on a trade, you're thinking 250 pips on a trade because you're going to be in it for 3 or 4 days, maybe 3 or 4 weeks. And that is the major benefit of QuantBox, to know that your trades are worth more, not because of luck, but because your analysis is better. Your analysis is worth more, therefore your trades are worth more. And once you get that down, and then, and really the other amazing thing about QuantBox is it told us for weeks and weeks and weeks, like 5 weeks in a row, no major trades, no major trades, no major trades. It was clear. QuantBox immediately within seconds just showed you no underlying intrinsic trend, nothing. So you keep your powder dry, you don't lose money trading in bad market conditions. And now if things warm up and you got yourself a trend, you have all that dry powder. And so in when market conditions are bad, you don't overtrade and lose. And when market conditions are good, you're able to let your winners run. So if you can look at that over the course of the year, what if you had 25% less losing trades because you didn't really trade much in mediocre market conditions? And then what if your average winner was 25% more because you knew when you got things congruent fundamentally and technically, they just ran a little bit longer? I think all of that's fairly reasonable based on the logic I presented. If you had 25% less losers and of your winners, they ran 25% more. The difference is mind-bogglingly, that's a word, by the way, you have to Google it, right? Different. And I'm not saying more trades. I'm saying better trades, not because we're somehow supernaturally better, but you're only buying dips in an uptrend, technically and fundamentally. And when the trend is downtrend, but the fundamental is uptrend, you go cold shoulder, baby. You're like, I don't like trading in market conditions like this. Fundamentally, it looks up to me. Technically, it's down. I think I'll pass. Now, that's boss mode, in my opinion. Now you're thinking and acting and trading like an institutional investor. But see, they have millions, tens of millions of dollars of support. They have entire teams of staff to get to the same conclusion. They have board meetings, strategic meetings. All right, I want ideas on this board and I want them now, right? And boom, the interns running around like crazy, popping ideas on the board. Then we debate and we analyze and then we come up, all right, everyone vote. Which strategy do we want? And everyone votes for selling Kiwi. Dude, but you can do it for less than $1 million a month. You can do it for $79 a month. But you get to the same conclusion as any other institutional investor like hedge funds. Yeah. Yeah, it's pretty epic. So look at that Kiwi cat come down. Lovely, tell your mom. I might pick up some. Peace on earth. May the pips be with you. May our profits be above average. Have an amazing day. If you're in the swing trading group or the day trading group at Investor Bootcamp, don't forget at FTSE, right? At 4 o'clock, we're going to read all the economic news that was important last week. Read the reports. Oh my God. Well, I'll do the reading and talking. How about that? And you do the nodding. That sounds good. That's fair. So I'll see you later. Have the